Good morning, everyone. We're about an hour and a half into trading, and I like to get videos out when I see things that are setting up or going on, and that's what I see right now. So we're going to get right into these stock charts, and what's happening right now in the market is what I was talking about. Now, in the past couple of videos, I talked about what they might possibly do, and today, to me, looks like a stop raid, a short stop raid. Now, it doesn't have to be. These things can either go, one of two ways. You either get the stop rate or you get the continuation. And this is an area where, as a short, and where I've taken shorts, we need to watch it closely because, whenever you're in that stop rate area, that is where you're going to find out if you're, whether you're wrong, basically, or right for the most part. But that's the name of the game. They usually push it right up to the limit, so you just don't quite know whether you're right or wrong. To me, it looks like this is a stop rate. So here's what I'm watching for. Qs. We have this 280. It's about 280.40 is the resistance level. That's the level I talked about yesterday, saying tech is right at resistance. We should get a reaction, a rejection. Now, as I zoom in here, you can see on this hourly chart, we got a little bit of a pullback, but today they gapped it up. They gapped it up over that resistance, and what creates, to me, what looks like a stop rate. Now, if they close this thing back below that resistance level today, then that will have, really looked like a, bull trap or a stop rate, basically. And so far, that's what it looks like. As you can see here, the first hour of the day, they sold into it and sold it pretty much right down to that 280.40 resistance level. They just sold it down right there, but it didn't close below. And then in this next hour, which we've got about 35 minutes to go, they're just hanging out there slightly above it. But they could come in and sell this down, and really you'll see that would basically be both hours closing right at that level or below. So even though this hour right here closed right at it, or it's basically right at it, and they're slightly above it right now, the close on the hour will be the tell. So if they can close it above that level, then we'll have to start to watch for potentially covering shorts. I started entering shorts right here yesterday, caught the breakdown that happened in the afternoon, and so I think I'm on the right side. But again, they don't make it easy. They want to shake you off the trade, and they do it with a gap up, and you can see it's already starting to sell off right there. Let me go add. Okay, so we'll see how this closes. They're not going to just, they're going to probably dance around this level for a little bit and then make it obvious. They did just sell it pretty hard in the last little bit, so maybe they're starting to make it obvious. But again, looks like a stop rate, and this is how it works. They don't, like I said, they don't just come right up to a level. When I say they, I mean the market makers, the powers that be. Anyone who wants to take a big position can't just jump in and take a position if nobody's selling any shares. So if, let's say I'm a big institution and I want to take a big short position, well, if I start shorting here and everybody else is shorting, then the price just moves down and I don't get a good allocation, I don't get a good fill, and I don't get my position size that I need. They've got billions and billions of dollars that they can take positions on. So rather than do that, what they like to do is they pop it. They'll use the futures or something like that to pop the market up into the area where short sellers that maybe took it yesterday would have their stop losses set. And then when the market opens in the morning, those stop losses are firing off automatically and saying sell or cover in this case. And the market makers are then buying those positions from them, essentially, and they're able to allocate much larger position into those stop loss orders being fired off. So that's how that works. That's the dynamic of it. And that's why when you're looking at key levels, you always want to think about the market psychology around those levels. And that's the tell that you want to look for. Sometimes they'll pop it and it'll hold, and then you'll just move higher, and that says, okay, there is strength here. We are going higher. But around those levels, if you see a pop and then they fade it, then you know, that tells you that was a stop raid. And that's what I think this is. So we'll see. There's still more, obviously, today to go today. The other thing that I want to talk about, and I talked about this, I pointed this out. I said the other day, SPY hadn't quite reached a resistance level up around this 339, and my level might be off slightly, but I think we got there this morning. But SPY was still hanging down here, and Qs was pretty much going back to Qs. We were right up at that resistance level. So what I thought was maybe in this, and you can go back and watch the video, I said what they might do is pop Qs up over this resistance level, making a stop raid, and then SPY at the same time would pop right up into resistance. And that's what happened. So if that holds, then that call that I made was accurate. And, you know, I just saw that as a possibility because SPY hadn't quite got to its resistance level. For the market to move down, you usually want to see both major indices, SPY and tech being kind of the major player right now, right at the resistance level, getting rejected. So I thought SPY had a little more room to go, and then Qs would do a stop raid kind of move. So we'll see. We'll see if that plays out. Qs is just kind of hanging out right there, so they'll let us know here pretty quick if this is going to start selling off. Let's look at some sectors here. XLV. I adjusted this downward line up just a little bit to kind of make sense with these reactions here, and I'm still catching. You know, I was just slightly down, but ultimately I still captured the flag. So I think we're just doing a back test of that flag, and we're going to start to roll over on XLV. Look for XLV to, I mean, to me, it looks like an objective area to actually short this thing. And look for, of course, and they did, you know, maybe they popped it right here. So we'll look for that. But to me, it looks pretty objective for a move down to 101 and then ultimately breaking and going down to 97. Here's XLF. You can see in the first hour today, they popped it above this resistance, 2416. They had it all the way up here. I think they moved it all the way up here, and it has since sold off pretty hard and is back below resistance. So that from the high to where it's at is a 1% range, and so we're back below resistance. So look for this to, I'm looking for this resistance to hold and for XLF to continue to sell off. Apple here, pretty much at resistance. Didn't quite get there. You can see, resistance I have at this 118. It's about 118.50. Maybe they're stepping in early and selling it down. Now, this one, obviously because it didn't hit resistance, they could pop it up into resistance, and that could. We'll have to see what that does to the Qs, because if this thing moves higher, it drags everything up. So with the Qs being kind of right at resistance, basically, if Apple moves up, it might do the technical damage to Qs that allows it to continue higher. I guess it's not really damage. It'd be constructive in Qs. Okay, let's look at some of these trade ideas I've pointed out, and then I'll try to look at some subscriber stocks and comments. DraftKings here, and look, it's still early. Lots can happen. I'm just trying to point out ultimately the potential for the stop rate, and I think that I need to get that out early this morning as it's happening right now, so that everyone has an opportunity to look at their positions and evaluate how things are going. DraftKings. All right, so they just continue to walk up, move up, but below the trend line. And this is common. I kind of figured this might happen, where they're just going to continue to try to do these back test popping action where they pop it into the trend line and then it fails. They'll pop it into the trend line. It'll fail. One of these times, I think it's going to, it's just not going to pop up anymore. They're going to start moving it down. I think that's coming soon. This might be it. But again, we're just kind of continuing to walk up the trend line. I took the short right here. I believe I added it on this pop candle right there. So I'm down slightly. I don't know where I exactly added it, but I'm down, about 5%. Yep, and I looked at my trading platform. I'm down 4.56%. So I took it right here on this pop. So down slightly. But again, not a full position allocation. This thing can move. I knew it wasn't necessarily going to just get rejected here. We're not even at the trend line to fully back test. So I'm looking to add if we get that full back test of this broken trend line right here. And if we don't get it, then I'll potentially add, but I want to see that price action, that bearish price action come into play. And until then, I'm just going to keep my half position on it. Okay, the other one that I'm really looking at is Tesla, and I think this thing's running out of steam, although still above trend. So keep that in mind. I was looking at a triangle, but it's not there. I was looking at this symmetrical triangle right here, which would be the top right here, something like that. Yeah, maybe it's there, but we're gonna just really, I'm just focusing on this trend line going all the way back to March. And so this is your trend line we've been walking up, broke down right here, recovered it, and we've just been kind of walking up it. So every day they're kind of just grinding it a little bit higher. But, nothing that's crazy, especially for Tesla. And, if you look at the RSI and the PPO on the daily, we have negative divergence. That's really part of this big pattern right here. So it's a bigger pattern, and it is setting up for a bigger move, I think, to the downside personally, but again, still above trend. So there is no sell signal, and so there is potentially no reason to really be short. I am still short on this one. I'm not going to let it go too much further, and I can always cut it and just come back. It's not a huge position for me, but can always cut it, come back when I get that solid sell signal. But the only thing that gives me pause is the fact that it's just barely it's just grinding along the support line. It's barely moving. I suspect today, tomorrow, they're going to sell it down back to the trend line. It's just not able to really lift off of this trend line too much. So if we get that lift off move, then that would be a clear sign that it wants to go much higher. But until then, it's just not the same behavior that I've seen throughout this entire rally, where every single time it's tagged the trend line, it's just ripped off of it like 80%. It did it there, did it there, did it there, did it here up 30%, and now we're just grinding. So change in behavior, which tells me it wants to break down with negative divergence on the daily. KHC still holding below resistance right here at this about $30 level. They popped it today just slightly, but then faded it back and still below resistance. So again, I think KHC's, ultimately I'm looking at buying KHC around 25. I think it's heading down to 25. PM, Philip Morris. This one is making a new divergent low today. You can see we're coming right down. I might add a little bit to the position, and then I'm not going to add any more. And I'm looking for it to really hold in this area. If it doesn't hold, we'll stop out. Of course, look for some sort of a gap down and then a recovery of this descending trend line right here. So, a gap down, maybe down to around $73.50 or something like that, $73. Shouldn't be too much below that, but you could look for that. And if you get that gap down, that's a stop rate potentially if it recovers the trend line. So watch for that. That's always possible. But we still have positive divergence, and right now we're making a new lower price in this pattern, in this divergence pattern right now. So this is an objective area to add to the position or start one. Although, nothing's guaranteed. So, but watch for a gap down and a recovery, or just to hold here. If they gap down and it sells off and you get a close below the trend line, then that's pretty bearish. You might want to look at stopping out. But it's at the area where it makes sense to take a position long. Pulte Homes here, doing the same thing as DraftKings, kind of popping it and getting rejected. It just keeps getting, every time they pop it up near this resistance, they're selling into it. So I think the selling's going to catch up, and we'll start to see this thing work its way lower. Until then, it just kind of back testing the trend line here that it's broken. So there's your trend line, broke the trend line. There's a back test failure, kind of running up for another back test, but it keeps getting sold into. So we'll watch this. You know, maybe there's one day where they gap it way up right at resistance again, and that would be, you know, the end of the move up and possibly start the next trend down. But the trend is bearish in this thing at this point because it's broken below the uptrend. All right, that's all I got for this morning video. I'm going to get this one out, and if anything gets crazy throughout the day, I'll probably do an end of the day closing video, and I'll catch you guys on that next one. Bye.